Hi friends, welcome to today's webinar. So we'll just wait a minute or so. Quite a few of our friends are still joining in, and we'll just wait a few seconds and we'll start with the session.
ठीक है यार, वो मैंने देखा थोड़ा एक शैडो जैसा दिख
Hi friends, let's start with the session. तो जो सेशन रहेगा मैं इंग्लिश और हिंदी में दोनों में I'll take it a mix of it so the benefit of all our friends who have joined this session today. And session के end में we'll be having a Q&A session. तो participants, anyone who has any of our friends who has any queries regarding the topic, please feel free to ask your queries. आज का टॉपिक एक बहुत ही अच्छे और सिंपल कॉन्सेप्ट के रिगार्डिंग है, दैट इज ऑप्शन बाइंग वर्सेस ऑप्शन सेलिंग. See, it is very important to have your concepts clear. See, it is not an advanced topic as such, but the very basic is also very important for everyone to understand. What is the reason why people go towards option selling? There is a lot of interest towards option selling. What is the probability of success? We'll discuss each of these scenarios. Example के साथ हम लोग discuss करेंगे. So the concepts are clear to everyone. I'll be taking the session in a very simple manner. The understanding of probability, the understanding of success ratio, win rewards for an option buyer versus an option seller, and different strategies that a trader can consider. So at the end of the session, अगर आपको कोई भी concept के ऊपर doubt रहेगा, we'll brush it up once again. So without wasting any further time, let's get started with today's session. So first and foremost, whenever we are trading in the markets, the most important concept is framing a view on the market. तो जो व्यू बनाना रहता है, that is the most important and most challenging thing. See, making a strategy is relatively easy. वो कोई भी सॉफ्टवेयर आपको अभी अभी के टाइम पे it will provide you these strategies, but to frame a view on the market, to hold your position through the volatility, that is the challenging thing. So that comes with experience. It takes time to analyze the market, to frame your view. Then the scenario, whether you should buy a call option or sell a put option. Both of the things have different, even though the view is relatively similar, both of the options have a different payoff diagram. So it's important to understand कौन से समय पे आपको ऑप्शन बाइंग करना चाहिए, कौन से समय पे आपको ऑप्शन सेलिंग करना चाहिए. We'll go through that as well. And if you are doing overnight positions, how to hedge your positions while selling option. अगर आपका view, even though you have formed your view, how to reduce your risk to an extent, that we'll discuss in the part regarding hedging of options using various strategies. So today we'll discuss regarding the part regarding framing a view regarding and how you can make the various. See, it's all about options in today's trading session. Option buying versus option selling. Options is the more versatile product. Futures जो है, it's a very simple product, जो एक linear product है. But options is the more versatile of the two. We'll discuss regarding options in today's trading sessions, that is buying and selling. So this is the most important slide to understand. There are for every particular trade to be executed, there is a bullish side. See, you have a call, you have a bullish view. So जिसका भी view तेजी की तरफ है, he will consider to buy the call option. But for the trade to get executed, you require a counterparty as well, who should have the exact opposite view. See, only when there is a counterparty to the trade, your trade will get executed. So if there is someone who is buying a call option, there should be an option seller as well. He is the exact opposite, means unka view exact opposite रहता है compared to your view. So if you are buying a call option, you have a bullish view on the market. So Nifty is trading at 25,100 odd levels. So if you have a bullish view on the market, there should be someone who has a bearish view, or at least a sideways view that the index would trade in a range bound manner in the next few trading sessions. So that's the only reason someone would go ahead and sell a call option. That is one part of it, the bullish side, that is you have a positive view, someone else has the negative view. That is the call part of it. If there is a question that if there isn't a counterparty, what happens? I'll just take this question quickly, since it's asked immediately. If there is a no counterparty, the trade will not get executed. Just imagine there are only two people who are trading. If there is if you are one party and you are waiting for the trade to get executed, if there is no counterparty, the trade would not get executed itself. Suppose you want to buy a call option and there is no counterparty ready to sell the call option, your trade would not get executed itself. So that's what happens in an illiquid counter. So that's why if you want to buy something at 100 and if there is no ready sellers in the market, the prices would be very far apart, the spread would be far apart. That is known as spread or impact cost. So if there is no counterparty, the impact cost or the spread tends to be on the higher side. But luckily for us, in a product like Nifty, Bank Nifty, Sensex, it's extremely liquid. So for every tick, you can say there are thousands of traders who are ready to buy and sell. So you will never face any major problem when you're trading in the index options part. Now coming to the second part of it, that is put options. So in put options, you have a bearish view on the market. That is, the buyer of the put option has a bearish view on the market. So he feels that Nifty, which is currently trading at 25,100 odd levels, can witness a correction on the downside. So that is why he would go ahead and buy the put option. Now there should be a counterparty to this particular trade as well. The counterparty is someone who has a bullish view on the market, because if he has a bullish view, only then will he sell the put option to you. So even if the market goes bullish or remains sideways, in that scenario the seller of the put option will end up making money. So I'll take every single I'll take it with example, so the concept is much more clear. But this particular slide is the most important slide to understand, that for every trade to get executed, there should be a counterparty. For every call option buyer, there should be a call option seller. Likewise, for every put option buyer, there should be a put option seller. So once you have got a clean understanding of this, you will understand that why there are so many traders who are fascinated towards the selling part of the options. So this particular slide is the slide regarding, so it has just slightly overlapped, but this is the current chart structure of Nifty. I do not want to take any hypothetical situation. This is the current scenario regarding Nifty. So Nifty has, over the last one trading session, witnessed a slight pullback. Today's session was not so positive, but yesterday we witnessed a decent pullback. So I'm just explaining it from a view point of view. So any trader who's feeling that the index has slightly taken support, you can see the yellow color line. That is the 50-day moving average, exponential moving average for Nifty. And we witnessed a decent rebound with the index closing closer towards the high point of the day. So any trader who has a bullish view could consider to take a buy position. Means this is just the logic or the setup that I'm explaining. In intraday, and while taking the position, you have to take into consideration stop loss and many other factors into consideration. This is just from a view perspective that I'm saying. When a trader would consider to buy a call option, if he feels that the index has slightly bottomed out. From the past 10-15 trading sessions, we have witnessed a slight selling pressure, and this is the first sign of slight recovery that we have seen yesterday. So a trader who has a slightly bullish view on the market would consider to buy a call option. Another reason, if the view goes correct, if there is a pullback in the market, if you see currently the FI long short ratio is at multi-month low, that is for every means if you see the FI long short ratio, it is at 15%. What it means is for 100 contracts, there are 85 short contracts of FIs and 15 long contracts of FIs in the futures segment. That is, so the FI long short ratio, that is for the index futures, that is for all the indices combined. It currently stands at 85% short contracts and 15% long contracts. So if there is a pullback in the market for any positive reason, I'm not saying that that means the chart is indicating a major pullback, but even if we get a slight pullback, and if there is a rally, then FIs could consider to close their short positions as and when we go closer towards the monthly expiry. If we get any positive news and if the market witnesses a pullback, we could experience a bit of short covering. But at present, FIs have significant short positions in the index segment. So this if you see, this is the current scenario. The index is at closer towards 25,100, जो spot का level है. A trader who has a slightly bullish view on the market would consider to buy the at the money option. Generally जब भी हम लोग trading करते हैं, it is always advisable to consider trading in at the money options rather than deep out of the money या deep in the money option. इसका reason भी है why the एट द मनी ऑप्शंस आर मोर फेवरेबल. अगर आप रिस्क रिवॉर्ड को देखोगे इन टर्म्स ऑफ रिटर्न ऑन इन्वेस्टमेंट, अगर सारे पैरामीटर्स को आप कंपेयर करोगे, द रिटर्न ऑन इन्वेस्टमेंट एंड योर रिस्क रिवॉर्ड, दिस इज द मोस्ट फेवरेबल जब भी आप एट द मनी के ऑप्शंस ट्रेड कर रहे हो. एट द मनी बेसिकली मीन्स इन वेरी सिंपल टर्म्स, अगर इंडेक्स 25,100 पे ट्रेड कर रहा है, द स्ट्राइक प्राइसेस 1 or 2 स्ट्राइक प्राइसेस क्लोजेस्ट टुवर्ड्स 25,100 would be your at the money strike prices. ये दोनों कॉल और पुट के लिए एप्लीकेबल है. इट इज बेस्ट टू ट्रेड इन एट द मनी स्ट्राइक प्राइसेस. तो करंटली अगर आप देखोगे 24 जुलाई, करंटली वी आर एट 22 जुलाई. तो ये जो थर्सडे है, अगर 24 जुलाई का अगर आप 25,100 का कॉल ऑप्शन देखोगे, लगभग 105 के आसपास था सुबह के टाइम पे. द प्राइस इज 105. सो इफ यू वांट टू परचेज अ कॉल ऑप्शन, you will have to pay 105 into 75 जो इंडेक्स का लॉट साइज है. तो करंटली इंडेक्स दैट इज निफ्टी का लॉट साइज जो है दैट इज एट 75. So that comes up to, if you see the amount comes up to 7,875. तो अगर आपको इंडेक्स का एक लॉट बाय करना है निफ्टी का एट द करंट जंक्चर एट द मनी का, इट वुड बी कॉस्टिंग यू समवेयर अराउंड 7,875. So that's the premium that you have to pay, total cost जो आपको ये transaction execute करने के लिए. So that is the buying part of it. I'm just explaining a step by step process. If you have built up a view that the markets could rebound on the upside, and if you go ahead and you purchase a call option, what is the cost of executing the transaction is what I have basically explained in this slide. So if you see, if you have a bullish view on the market and you expect Nifty to go up, that is, so 25,100 is the strike price that you are buying, plus 105 is the premium. So आपका net total break even point comes at 25,205. So if the index moves on the upside, if the index moves towards 25,300 levels, 350 levels on the upside, so suppose it goes to 25,350, आपका profit जो रहेगा that would be 145 points. So 145 into 75 जो index का lot size है, that comes up to 13,500. So your return on investment जो है that is 13,500 divided by your cost जो आप लोग premium भर रहे, that comes to 171%. So if your view goes correct and the index witnesses a positive rebound on the upside, your return on investment would be 171%. That is for the buying part of the leg. Now just let's have a quick glance at the selling part of it. So if you sell the at the money call option, and if the market remains relatively sideways or witnesses a correction on the downside, how much will you earn? So the net profit that you can make in this particular transaction is 7,005. The cost that the buyer pays, जो buyer premium भरेगा, that is the total cost, I mean the total profit that the seller is going to make. So the total profit in this particular transaction is 7,875 for an option seller. Just imagine there are two people in this transaction, there is no one else. So whatever the option premium that the buyer pays, that's going to be the maximum profit for the option seller. But do note that in option selling, the margin amount is slightly on the higher side. It is almost equal to futures segment. So you will have to pay a margin amount closer towards 2 lakh to do this particular transaction, because there is risk also. Because if the market suddenly rises on the upside, there is unlimited loss for the option seller. So इस कारण the broker tends to charge a higher margin factor or risk factor from the particular trader. So 2 lakh 6,000 is the approximate margin to execute this particular trade. So that is the cost of option selling. So if you go to see your return on investment for the particular trader in this particular trade, if it goes correct, if you are a call option seller, you want the markets to remain relatively sideways or witness a correction on the downside. So 3.8% is what you can make if your view goes on the positive side. It may not look much, but the probability of success for an option seller is much higher compared to an option buyer. I will discuss this in greater detail in the slides to come, but I just wanted to highlight the concept of probability as well. You may be thinking right at the start itself, agar option buyer ka reward return on investment is so significantly higher, why does anyone go towards option selling part of it? The reason being, in option selling, your probability of success is much higher compared to an option buyer. So now let's go to another scenario. The view is the same. पहले में आपका view तेजी की तरफ ही था. You were on call option buyer. Now also your view is on the positive side itself. But instead of doing call option buying, we do put option selling. The view is same. We expect the markets to remain relatively on the positive side, or at least witness a sideways consolidation. So the index is trading at 25,100 odd levels. The trader considers to sell 25,100 put option, which has a premium of 100. So 100 into 75, that is 7,500, is going to be the maximum profit for the put option seller. In which scenario will the put option seller make money? The put option seller will make money as long as the index trades about 25,100 odd levels. So जब तक market 25,100 के ऊपर है, the entire 100 will be your profit. The break even point, or the point when he starts making a loss, is 25,100 minus 25,100 minus 100. तो 25,000 के नीचे अगर इंडेक्स चला जाता है, that is the time the put option seller will start making losses. Till the time the index is about 25,000, he will, between 25,000 and 25,100, he'll have narrow profits, and the break even point is 25,000. So 25,000 ke niche, that is the time when the put option seller will start experiencing losses. So this is the basic understanding of the call part, the put option side, because you have to have, once you understand this part of the options part, you will be able to come up with any strategy. जो भी strategies है derivatives में, it's all built on these four concepts itself. That is call option buying, call option selling, put option buying, and put option selling. ये जो चार legs है, that the four different legs, that's the entire thing to options. If you see all the strategies in derivatives के कोई भी strategies हो, it is all built up on these four legs itself. So you should clearly understand the difference between call option buying, call option selling, put option buying, put option selling. So if you sell the put option, you have a bullish view on the market. आपका view तेजी की तरफ है, and you expect the index to go on the upside. So if the index moves up and the index stays above the strike price that you have sold, you end up making decent amount of profit. Even if the index remains relatively stable at that particular level itself, अगर markets उसी level पे बंद देता है, still you will end up making decent profits in the particular trade. So now going to the next example or scenario. This is the chart setup of Bank Nifty. So I just wanted to highlight that the index post its sharp rally yesterday is facing a bit of selling pressure today. So any trader who's feeling that the pullback is a false pullback and the markets could witness correction in the days to come can consider to buy a put option. So that's the basic logic. If you see the index is facing resistance at higher levels, and if there is a trader who feels that जो pullback आया है markets में, it's not going to sustain, and once again we will be taking out the lows of yesterday, and we could witness continuous selling pressure. And once you have formed such a view, you can consider to take a put option. So put option is basically a trade where a trader has a bearish view on the market. He feels that the index can witness a correction on the downside, and that's why the trader considers to buy a put option. So imagine that the index is at 56,850 spot level जो है बैंक निफ्टी का, it is at 56,850 levels. So any trader who has a slightly bearish view on the market would consider to buy the 56,800 put option. सो द प्रीमियम फॉर दिस पर्टिकुलर ट्रेड इज 350. जो प्रीमियम है, अगर आपको बैंक निफ्टी का एक लॉट बाय करना है, यू विल हैव टू पे 350 इंटू 35. निफ्टी का जो लॉट साइज है दैट इज 75. बैंक निफ्टी का जो लॉट साइज है दैट इज 35. करंटली इट इज एट 35. तो 31 जुलाई का एक्सपायरी रहेगा, बिकॉज बैंक निफ्टी में वीकली एक्सपायरीज बंद हो चुके हैं. पहले हर वीक में एक वीकली एक्सपायरी रहता था, अभी बैंक निफ्टी के वीकली एक्सपायरीज को बंद किए गए हैं. पहले वेडनेसडे को बैंक निफ्टी का वीकली एक्सपायरी रहता था, ट्यूसडे को फिन निफ्टी, मंडे वी हैड मिड कैप सिलेक्ट, एंड थर्सडे वी हैड द निफ्टी एक्सपायरीज. All that has changed to a great extent. Now we have only the weekly expiry of Nifty, which is every Thursday. So if you have a bearish view on the market and you consider to buy one lot of Bank Nifty put option, you will have to pay 12,250. How 12,250? 350 जो option का premium है into the lot size of Bank Nifty, that is 35. So 350 into 35, 12,250 आपको भरना पड़ेगा ये पर्टिकुलर ट्रेड एग्जीक्यूट करने के लिए. So in this particular transaction, you buy a put option if you have a bearish view on the market. You feel that the index can witness a correction on the downside. So you buy that is the Bank Nifty put option. Your break even point is the strike price minus the premium that you have paid. Call option में break even point is equal to strike price plus the premium that you have paid. Put option में it is strike price minus the premium that you have paid. Do note that ये जो ब्रेक इवन पॉइंट का जो कॉन्सेप्ट है, इट इज ओनली इफ यू होल्ड द पोजीशन टिल एक्सपायरी. अगर आप इंट्राडे ट्रेडिंग कर रहे हो, शॉर्ट टर्म ट्रेडिंग कर रहे हो, तो आपको ब्रेक इवन पॉइंट या कॉन्सेप्ट के बारे में उतना इट्स नॉट एप्लीकेबल टू यू, बिकॉज यू आर टोटली कॉन्सेंट्रेटिंग ऑन द ऑप्शन प्रीमियम. आपने अगर 350 भरा है, इफ इट गोज टू 400 इन द नेक्स्ट 5 minutes ऑल्सो, यू कैन क्लोज आउट द ट्रेड. आपको ऑल द वे टिल एक्सपायरी पोजीशन होल्ड करने की कोई ज़रूरत नहीं है. बहुत सारे ट्रेडर्स में ये कंफ्यूजन रहता है, अगर उन्होंने वीकली प्रोडक्ट में कोई बाय किया है, वेदर दे हैव टू होल्ड इट ऑल द टाइम वे टिल एक्सपायरी और नॉट. दैट इज नॉट द केस. यू जस्ट हैव टू फोकस ऑन द ऑप्शन प्रीमियम. अगर ट्रेड आपके फेवर में आ जाता है विद इन 5 to 10 minutes ऑल्सो, यू कैन क्लोज आउट योर ट्रेड एट एनी पॉइंट ऑफ टाइम. सो फॉर अ पुट ऑप्शन ट्रेडर, अगर मार्केट्स में सेलिंग प्रेशर आ जाता है and the index witnesses a sharp correction on the downside, that's when he'll end up making profit. For a put option seller, जो counterparty जो रहता है, who will sell the put option, he makes money if the index remains relatively on the upside or remains sideways. जो strike price उन्होंने sell किया है, अगर market उस levels के ऊपर रहेगा, then he'll end up making profit. That is for the put option seller. How much profit can he make? The maximum profit that a put option seller can make is the option premium that he collects. तो स्टार्टिंग में जब ट्रेड एग्जीक्यूट हो जाता है, जो प्रीमियम जो ऑप्शन बायर पे करता है, दैट इज द मैक्सिमम प्रॉफिट दैट द पुट ऑप्शन सेलर कैन मेक. वंस अगेन, डू नोट दैट यू कैन नॉट मेक हायर ऑप्शन मीन्स प्रॉफिट्स मोर देन द premium that you have collected right at the start. That's the basic difference between option buying and option selling. We'll go into more detail why someone would go into the option selling part जब भी मैं probabilities के बारे में explain करूंगा. that time I'll explain the concept in a more simple manner, why there is so much even though there is so much interest towards option selling, why it could be a challenging situation. So this is a very simple example. This is the second part of it. The view is bearish itself. This is selling of call option. पहले हमने देखा था आपका व्यू मंदी की तरफ है, तो आपने पुट ऑप्शन बाय किया. The second or the fourth part of understanding options is selling of a call option. The view is the same. मैंने सब सेम व्यू के दोनों को क्लब किया था. स्टार्टिंग में आई हैड क्लब द बुलिश व्यू, जिसका व्यू बुलिश है यू वुड बी बाइंग अ कॉल ऑप्शन और सेलिंग अ पुट ऑप्शन. जिसका व्यू मंदी की तरफ है you would be either buying a put option or selling a call option. So I hope everyone is clear with this part of understanding. You sell a call option if you have a bearish view or a sideways view on the market. So the index, that is Bank Nifty, is trading at 56,850. You feel that the markets could remain relatively sideways, so that's why you consider to sell the 57,000 call option, जिसका प्रीमियम लगभग 200 है. So the expiry is it's not 24th July, it is 31st of July. That's a slight mistake. The month end is the expiry for Bank Nifty options. The maximum profit that you can make in this particular trade is 200 into 35, that is 7,000 rupees. तो अगर markets 57,000 के नीचे रह जाता है, then you will end up making profit. So you end up making profit if the index remains relatively sideways or witnesses a sideways consolidation. Maximum profit that you can make in the particular trade is 7,000 rupees. Now coming to the very important slide regarding probability of success. See, whenever at any point of time, if now take the scenario that the market is at 25,100 levels. At any point of time in the market, there are three scenarios that can play out. One scenario is the index moves from 25,100 towards 25,300 levels on the upside. So that is 33% chance that the markets can move on the upside. There is 33% chance that the index can remain absolutely sideways. And there is 33% chance that the index can witness a negative correction. So I hope everyone understands all these three scenarios, because at any point of time in the market, other than these three scenarios, nothing else can happen. Either the markets can go up, either the markets can go down, or either the markets witness a sideways consolidation. तो हर एक इवेंट के साथ 33% प्रोबेबिलिटी है. And we have clearly understood that if you are a call option buyer, you will make money only when the markets go up. So if you are a call option buyer, your probability of success is 33%. Now take the scenario for a call option seller. Call option seller will make money in two scenarios: if the markets remain relatively stable or if the markets witness a correction on the downside. ये दोनों scenario में the call option seller will make money. So his probability of success is 66%. So I hope everyone understands. Probability of success for an option seller is 66%. Probability of success for an option buyer is 33%. तो जब भी आप पुट ऑप्शन, नाउ लेट्स टेक द सेकंड सिनेरियो ऑफ पुट ऑप्शन. So for put options as well, the probability of success for option selling is 66, and for buying a put option it is 33%. You will make money अगर निफ्टी सिर्फ अगर currently if Nifty is at 25,100, you will make money by buying a put option only when Nifty witnesses a correction on the downside. If the markets remain relatively stable, then the put option buyer will end up losing money. So I hope everyone understands. In option buying, I'll just repeat it one last time. In option buying, your probability of success is 33%. In option selling, your probability of success is relatively 66%. So now there will be a lot of questions कि अगर probability of success is 66% for option selling, then why should everyone not be an option seller and always, मतलब why, what is the reason for being an option buyer? The reason being, in option buying, even though your probability of success is slightly less, your risk also is slightly less, and the situations when you make money, you can make significant profit. So we have seen that our return on investment can be significantly higher. आपका अगर view सही चला जाता है and you are able to capture the direction properly. So option buying is more for who's good at scalping, who's good at delta hunting. मतलब आपको डायरेक्शन पकड़ने में बहुत easiness है, then the option buying is a good thing for you, because if you get the direction right, you can make significant returns. Option selling is more of a non-directional event. मतलब you make a view. Making the view is very important, and once you have made the view, you are backing on the event that the markets could remain relatively sideways or go in your direction. So that's what the option seller is taking into consideration. बट द रिस्क इज वेरी हैवी. जब भी आप ऑप्शन सेलिंग करते हो, आपको मार्जिन भी फ्यूचर्स की तरफ भरना पड़ता है. मीन्स द कॉस्ट ऑफ डूइंग द पर्टिकुलर ट्रेड इज सिग्निफिकेंटली हाई, एज वेल एज द मैक्सिमम प्रॉफिट इज लिमिटेड. मतलब आपका प्रॉफिट, मैक्सिमम प्रॉफिट जो है, दैट इज लिमिटेड टू द एक्सटेंट ऑफ द ऑप्शन प्रीमियम पेड. उससे ज्यादा आपका कभी प्रॉफिट नहीं रहेगा. So that's a bit of a downfall towards the option selling part. आपको रिस्क ज्यादा लेना पड़ता है and the reward is capped. So if you compare both of it, option buying and option selling, it matches out. मतलब there is higher money to be made in option buying compared to option selling in terms of price action and movement, if you are able to capture it properly. But in terms of probability, the higher success is associated with option selling. So there is no clear answer whether you should always be an option buyer or an option seller. Different scenarios in the market require you to change your game. In certain scenarios, it is good to be an option buyer. In certain scenarios, it is good to be an option seller. So we have discussed this particular slide wherein the probability of success of each of the events is discussed. That is, buying call option, your probability of success is 33%. Selling a put option, your probability of success is 66%. Buying a put option, your probability of success is once again 33%. And selling a put option, once again, your probability of success is 66%. Now moving forward one leg higher. Till now we have learnt about single leg strategies. Let's quickly discuss regarding multi-leg strategies in the next slides. So multi-leg strategies or spread strategies is always suitable towards traders who want to carry forward their position to the next trading day. तो आपको अगर आपके positions को carry forward करना है, it is always advisable to do it in a spread manner, in a spread strategy, rather than doing naked selling and buying of options. So this is the same chart structure of Nifty. You have a bullish view on the market. So instead of just naked buying of call option, what you can do is you can do a credit bull spread strategy. In a credit bull spread strategy, what you basically do is you sell a put option of at the money strike price and you buy a slightly out of the money put option. This is just to hedge the particular trade. See, now why you require to hedge your trade overnight is, अगर कोई major negative news आ जाता है, you have sold the at the money put option, so we have received higher premium in this particular trade. Now suppose there is some major war और कोई भी एक major event हो जाता है, and if the markets witness an extremely sharp correction, there will be significant loss अगर आपने सिर्फ put option sell किया, if you do not hedge it. So that's why along with selling of put option, we buy 1 or 2 strike price away put option to hedge the particular trade. So we buy 25,000, I mean we sell 25,100 put option and simultaneously we buy 24,900 put option. Do note that the cost of this particular transaction also comes down because we have sold something worth 100 and we have to pay something as well. So net the spread strategies are always towards reducing the cost of the transactions as well. You get a margin benefit as well when you do a spread strategy, because the broker and the exchange also knows that it's not a naked position, it's a hedge trade in the market. Now take the second scenario of one we have already seen, a bullish scenario wherein we do bear put spread, I mean bull spread. And the next one is a bearish strategy, wherein your view is on the bearish side. So instead of buying a put option, what some traders do is do a credit spread strategy, that is sell the at the money call option and we buy slightly one or two strike price away call option. Once again, it is from the hedging point of view. तो वापस आपका व्यू मंदी की तरफ ही है. You feel that the markets can correct on the downside, so that is why you sell one at the money call option and we buy a slightly out of the money call option. So in this particular trade, what we basically do is in this particular trade, this is the chart of Nifty itself. So in this particular trade, we sell, suppose markets are at 25,100 odd levels, we'll be selling 25,100 call option, and just to hedge the particular trade, we'll be buying 25,300 call option or a slightly away strike price. So if your view goes wrong, when the view can go wrong, if there is suddenly some major policy announcement, currently the budget season, I mean the monsoon season of the parliament is underway, and if there is something really positive which is announced, which the markets like and the index witnesses a positive rally, then to hedge your particular trade, the second leg of the buy call option, which is one or two strike prices away, will come into picture. So it's very important, जब भी आप overnight options trading करते हो, it's always advisable to do it in a hedged manner rather than doing naked buying and selling. Even if you're doing naked, do it with a small option premium to see to that your cost is reduced to a large extent. So this is the major difference between option buying and option selling. The capital required for option buying is low. For option selling, it is slightly on the higher side. If you see it in terms of risk, low premium is required for option buying. You require higher means capital to do option selling. In terms of reward, we have significantly higher reward associated with option buying. With the option selling, the reward is limited. Market view, when do we do option buying? When we have a strong directional view about the market, either on the positive side or on the negative side, that's the time when we will be buying a call option or a put option. For option selling, we expect the markets to remain relatively range bound or have a slightly bullish or bearish view on the market. If you are an option buyer, the concept of time decay or theta would work against you if you are an option buyer. If you are an option seller, the concept of theta works in your favor. Coming to volatility, volatility is a friend of an option buyer after you buy it, because if volatility is already present, the option premiums will be at a higher level. So if the volatility tends to increase after you have bought a call or a put option, there will be spike in the option premium, which is beneficial for an option buyer. These are the risk associated with the various strategies. So naked short or naked call and put option has a higher risk associated with it. अगर आप naked option selling करते हो या naked put option selling करते हो, there is always higher risk associated with it. Then comes the strategy part of it, that is short triangle, condor, butterfly. These are the strategies which have a slightly higher risk. Then we have the bull and bear spread strategies, post which we have the basic buying of call and put option, which has the least amount of risk in terms of strategies. So this coming to the concept of applying stop loss when trading in index options. It's extremely important to maintain a strict stop loss whenever you're trading in options. See, this is just an example. This is how volatile the price action can be during intraday trade. Multiple times the option price may move 300-400 points. ये BSE Sensex का weekly के options के कोई example है, wherein you can clearly see the option price moves from 900 towards 300, 300 से वापस 850, 850 से वापस 250 odd levels. It happens multiple times during the day, and without a stop loss your entire capital can get wiped out. तो कभी भी आप options में trade कर रहे हो in terms of an option scalper, do maintain a strict stop loss. See what happens, why I tell this multiple times is, see, there may be the option price is trading at 100. You consider to maintain a stop loss of 76. There may be 2-3 times when the option price will come from 100, it will come to 73, 74 levels, just touch your stop loss and once again rebound on the positive side. It happens in option trading. But the day you do not maintain this particular stop loss and you just hold the position hoping that the markets could reverse, that's the day when the option price will directly move from 74 levels all the way towards 20-25 levels on the downside. Then to recover your capital from 25 back towards 100 is an extremely challenging thing. It's almost like making your capital 4 times. From 74 you can always come back towards 100, but from 25 coming back to 100 is an extremely challenging thing. That to multiple times, if you do this, it'll simply wipe out your capital and you will completely quit trading. So maintaining strict discipline is very very important when you're doing option trading. Whatever it is, जब भी आप trade लेते हो, always consider to maintain a strict stop loss right at the start of the trade itself. जब भी आप पोजीशन बना रहे हो उसी समय आपको स्टॉप लॉस भी डिसाइड करना है, ना कि जब भी पोजीशन गलत जा रहा है. वंस द ट्रेड इज गॉन रॉन्ग, from that point onwards if you start deciding the stop loss, it will be significantly lower. Suppose it the trade the comes from 100, it comes to 70, and then at 70 you decide to maintain a 20-point stop loss, it may come to 50. Then what may happen is the price may just come towards 40-45 levels and then rebound on the upside. So you will feel like maintaining a stop loss of 50 also was not worth it. And those are extremely challenging and dangerous things to do. So always maintain a strict stop loss, maintain it right at the start. When you consider to take the trade itself, it does not matter if your stop loss is hit. It just means that that particular trade of yours has not gone successful. There are always multiple opportunities to make money in the market. If you maintain proper discipline, you will definitely come out on the positive side. So this is another example. पहले बैंक निफ्टी के भी वीकली ऑप्शंस रहते थे. This is how volatile the underlying used to be, bank nifty weekly options. So I just wanted to highlight from a example perspective that derivatives is very challenging. The speed of price movement is fast, so you have to be very alert when you're doing derivative trading. You have to be constantly monitoring your positions. It's not like cash market trading जिधर आपने पोजीशन बाय कर लिया और एक 15 या आधा घंटा के लिए आप आपके स्क्रीन को छोड़ के आप किधर भी जाके वापस आ सकते हो. दैट्स नॉट द केस. If it is a naked buying or of buying call option or put option, you need to constantly monitor the position, because even in a single, at the current juncture, even in a simple 5-minute candle, we could get 100-200 type point movement within Nifty itself. Within bank Nifty, so we could get 500-600 type of point movements within 5 to 10 minutes in the current scenario. So this is just a very important slide regarding maintaining the appropriate rules while trading in the derivative segment. तो मैंने इसी कारण explain किया था, derivatives is a double-edged sword. If you get it right, you end up making significant profit. But if the trade does not go correct, you could end up making significant losses as well. So do trade it with the appropriate stop losses in consideration. So stop loss is one of the most important things in derivative trading. When the view of the markets are not so clear, reduce the leverage that it is. Do not trade in significant lot sizes when the markets are relatively sideways. And taking into consideration, hedging is also very important when you're doing naked positional that is trades. Jabibi, if you want to carry forward your trade to the next trading day, do not do or naked buying and selling of call and put options. Even if you're doing it, do it on very confident days, days when the trend is extremely clear and there is high probability of the day being a gap up or a gap down. Only on such scenarios you should consider to do naked buying or call of put option, and that also is risky, and you should know the risk associated with whichever trade you are taking. Yeah, so that's an end of the session from my end. Now I can take the Q&A part of it. So any of our friends who have any questions regarding any of the concepts that we have cleared in today's trading session, please feel free to ask your queries. Thank you. So I'll just take the first question. There is just one question which is there from Murthy, which can you please tell short put strategy in stock options? So short put basically means you have to understand the view, sir. So short put basically means we have a positive view on the particular underlying. Now take the case. Now you take a stock like UPL. UPL, if you see the chart structure, it is clearly in a strong positive uptrend. Or another stock like Tata Chemical, something from the fertilizer space are doing really well. A stock like Mahindra and Mahindra is doing really well. So what you do in shorting a put option is your view is on the positive side. So you would sell a slightly at the money or slightly out of the money put option, expecting that the trend would continue on the upside. So as long as the stock or the trend continues on the upside, you will end up making profit. Whatever is the premium that you collect from selling the particular put option, that is going to be your maximum profit. So imagine that you sell an out of the money put option of Mahindra and Mahindra. The results of Mahindra and Mahindra come out good, the stock does good, everything is good, and the chart continues on the upside. This is just an example that I'm highlighting. So as long as the stock remains till the time expiry comes or till the time you hold your position, as long as the stock is trading above the strike price that you have sold, you will end up making profit in this particular trade. So it's another method of capturing the bullish view on the market. See, there are different methods to capture the same view is positive. You can buy either in the cash market, you can buy a call option, you can buy the particular stock future, or you could sell a put option. These are just some of the few methods in which you capture the price action movement in your favor by having the same view is same, bullish side price action, but the different strategies based on the capital that you have, based on your risk reward, is different. So I hope I was able to answer the question. Coming to what happens if there is a lot of speculation in the derivative market compared to the underlying instrument in cash, what are the risks involved? See, derivative by nature, it's speculative. It's previously derivative was introduced with the objective of hedging, to protect your position in the market. But derivatives is also a very good tool for traders who have by nature are speculative and who are trying to capture the underlying movement of the market. So if there are large positions in the derivative segment which are created, there is bound to be heavy price fluctuations in the cash segment as well. Those two are, you cannot de-link both of them. At the end of the series, the future and the cash prices have to come at the same point. So there is nothing that can be done. Now take the scenario that just take a particular in stocks, you generally don't see it, but take the case of Nifty itself. Suppose in Nifty there is huge positions built in 25,100 call option, that is call option. And if there is heavy rally in the market, there will be short covering which will come in 25,100 call option. So that will drive the markets on the upside. So when the index futures goes on the upside, the underlying stocks also will move relatively on the positive side. So if there are heavy positions in the derivative segment, it's going to have an impact on the cash. Likewise, if there is heavy selling pressure as well in the derivative segment, it is going to have an impact on the movement of the prices in the cash segment. So there is a question from Siddharth Malik. Your question, at present there is no answer for it, sir. It's a topic which is still under discussion by SEBI. Hopefully, we continue with this current method wherein there is two index weekly expiry. It's a very good tool for a lot of traders in the market, and hopefully uh, the Nifty weekly and Sensex weekly expiries continue to remain in place. It gives a lot of opportunities to make money if you have good trading skills, scalping skills, then index trading is the best product. There no other underlying can give you the type of price action which the index can give you. No stock can give you this particular price action which is provided by Nifty and Sensex. There is a question: Nifty index trading, how to gauge the volatility? So gauging the volatility, see, if you are a regular trader looking at the screen itself, you will understand the days when the markets are volatile. Suddenly if a price action comes, that is nothing you can do. But how do you gauge the general volatility of the market? One particular tool is India VIX. Currently it is extremely, you could say that it is gone out of sync with the volatility, because currently it is closer towards 11 12 levels, and still there will be days when Nifty will move 300 400 points. But overall it's a good tool to understand the overall volatility. So if you take the scenario of COVID phase, a larger picture, it helps you on a day-to-day basis. It's not going to help you much. Take the phase of COVID. We had India VIX, which was at 85 levels. What it meant was in Nifty could move by 85% either on the upside or on the downside in the next 1 year. It's an annualized number, that is India VIX. It's not telling you daily or monthly movement. It's telling you an annualized movement. And India VIX was at 85 86 levels. So that's how much panic was there in the market at that point of time. Currently it is just about 11 12. So what it is telling you currently is the index can move by 12 13% from a 1 year perspective, either on the upside or the downside. That's not much. The other method is looking at the option chain, and in option chain we have something known as implied volatility, IV जो हम लोग बोलते हैं, implied volatility. That's also a method wherein we can gauge whether the option prices are high or low. Generally we have the IV levels closer towards 16. So what you can basically do is you open the option chain, the monthly option chain for Nifty, and you take the at the money strike price itself. So 25,100 is the at the money strike price. This is the most simple method to calculate IV. There are other methods as well where you take the entire option chain and we calculate the IV. But if you take it even for the at the money strike price, call and put option, 25,100 strike price, and you divide it by 2. So 25,100 call option IV price plus 25,100 put option IV price divided by 2. What is the IV that you get? It is the number. So whenever this number goes towards 24 25 levels, you know that the IV is on the higher side. Generally it will be closer towards 14 to 16 is the range for at the money IVs monthly, that as I am saying. Weekly can be even less lower. And then there are methods like IV percentile, which will help you to gauge key historically whether IV percentile and IV rank. So once you have understood IV, you should know how to apply IV percentile and IV rank to understand whether historically this particular level ye ज़्यादा है या कम है. That you will understand by comparing the IV percentile and IV rank. But more or less, अगर आप charts देख रहे हो and you know that the IVs are trading about 20-24 levels, more or less the markets are in a volatile phase. This generally happens before any major event. जब भी बजट हो जाता है या फिर मेजर स्टेट्स के या कंट्री के इलेक्शंस जब भी रहते हैं, दैट्स द टाइम वी विटनेस स्पाइक्स इन आईवी. एंड जब भी ये इवेंट हो जाता है, दैट इज नोन एज एन आईवी क्रश. तो इमीडिएटली वो आईवीज नीचे भी आ जाते हैं, विच रिजल्ट्स इन अ शार्प ड्रॉप in option prices as well. Yeah, so there is a suggestion from Nikhil: when I buy stocks on E margin, then that's not considered for call writing margin. Please convey. So definitely I will convey this particular thing. But there is a risk with first of all, your position in E margin is a leverage product, means amount. So I'm not sure the risk team will be in a position to, but nonetheless I will definitely convey your suggestion towards the concerned team, and we'll see how best we can help you, sir. There is a question once again from Harish: is buying deep in the money calls versus selling deep in the money puts, which is better strategy? It's always better to do the at the money strike prices or slightly out of the money when you're doing option selling. deep in the money, it's a risk, because if you do deep in the money selling of call option and the markets witness a sharp surge, there will be significant losses. You want the markets to correct when you sell a call option. Likewise, if you sell deep in the money put options, markets are trading at 25,100 and we sell 25,600 put option. Instead of that, directly buy the futures itself. There is no concept of option premium decay and things like that. The better strategy is, if you have got a view on the market, directly buy the future or short the future instead of doing deep in the money call and put option selling, because margin तो आपको सेम ही लग रहा है. Instead of that, take a better view on the market. There is no theta decay. Delta of a future is 1. So if you are able to capture 50 points on the downside, the entire 50 points are yours. 50 into 75 will be your profit. So I hope I was able to answer all the questions in today's session. Thank you to all our friends for having taken the time out and having attended the session today. I hope I was able to convey the concepts in a simple manner. So tomorrow, once again, my friend Ashwin will be taking a session. Please, if please feel free to attend tomorrow's session as well. And we'll be having monthly, the entire month, next month as well. We'll be taking sessions. So if you have any doubts, if you have any suggestions, please drop it, and we'll be more than happy to help any one of you. Thank you once again. Wishing you all a happy day. Thank you.